So the first thing that I'm concerned about, we are having a gap, and as I've mentioned in the trade review over the weekend, okay, so when you have open drives within range, meaning there's no gap, right, we just open and we drive one way, okay? Prior to March, that's actually been indicative of an open drive high or open drive low and has led to trend days. But it has not been leading to trend days recently, and it's actually led to range extension and failure of range extension. So we're still within the larger range, but we're gapping, as I just showed you, to the very top of, on a closing basis, what's been the average. So the first thing I am looking for, because of the gap, that essentially puts us here at 1881.50, right, is a move like this. Okay, first 3 bars out. I do expect responsive sellers first time into this area. Okay, it doesn't have to happen this way. It's only the only reason why I would expect responsive sellers here is for psychological purposes, and not because there's good resistance in this area. It's actually very poorly auctioned above 1886. 1886.50 actually has it pretty poorly auctioned all the way up to 1892.25. Okay. However, psychologically, everyone's going to look at that and say it's the year-to-date high, and I would suspect the first time through that we're going to get responsive sellers. So, barring a straight drive off the open right into this area like this, I will take a short, probably middle to back. If you'll notice, this area is 3 points wide, and I try to do it basically no matter how I move this zone around. Essentially, I ended up with no matter how I move the zone around, I ended up having to struggle with where I was going to place the zone. Either have a resistance point here and then have the zone back here for 2 points. But no matter how you added it up, it was 3 points. So the way that I would work to place a trade in this area is to look for tick divergence on a 1-minute chart. So as I always go over each and every time, what's the cost for doing that? Well, there's twofold. First of all, tick divergence doesn't work every time on a 1-minute chart, but it certainly helps a lot, but particularly in the most recent markets, right? Secondly, the risk is always the same, 2 points behind the zone, right? So if I'm absolutely convinced that we're going to roll over from here or pull back from here, I can simply take the front of the zone with what ends up being a 5-point stop. Okay, it's rather rich, but that's what this trade requires from the front of the zone. My next choice is I can push middle to back and use my normal 4-point stop, which I'm somewhat inclined to exercise. I'm simply going to use tick divergence to figure out if I need to take it earlier than that 4 points. Okay, and then the last piece is you can use price action within the dome. Multiple people have asked me about the price action and how can I tell when it's slowing down. You can look in the zone in the dome when we're approaching a particular area, and you'll usually see a burst into the zone, and then you'll see it pause for anywhere from 20 to 30 seconds right at a particular point, but you'll literally see the dome almost stop. Okay, and that's the other piece that I'm looking for. I don't have another way of describing it. If I see it in real time, I'll certainly go and I'll try to hit the record button so I can play it back in tomorrow's session, hopefully, where we can actually see that the dome stops at a particular point, and that would be the price action that I'm looking for. But other than that, tick divergence there, and or simply take the trade and accept whatever the risk is, which is always 2 points behind the zone. Now, additionally, we'll also have the market relatively stretched, right? At 1885, that'll put us up 10 overnight. This 1889 will essentially have us up 14 points. If you'll look at the average range that we've had for the last couple of days, and let's go back here and look real quick. It'll make it easy to tell. Let's get format. Symbol. Close. Okay. This is 60 minutes. Let's go down to a 15-minute range. Okay, so if we look Friday from high to low, the range was approximately, well, I'll expand it a little bit longer. Let's call it 1863, right? All the way up to 1875. So it was a 12-point range. Prior day, high to low, 1884, to 18, let's call it 65, right? So almost a 20-point range. So what that tells me really quickly, right? On days when we're not having range extension, we're pushing sub 12-point ranges. On days when we are having range extension, potential 20 points has been the stretch. If you look at the prior day, that held true as well from 1855, right? We ended up closing at 1875. So that gives me two models to work with. If I identify that we're going to have a range extension or we're trending from high to low, either way, right? If I really want to make sure that I'm not getting run over and I'm a conservative trader, I want to work rotations and sizes of 10s, right? Because I know that on big days, we're getting 20 points. If I notice that we're in balance, right, I know that the biggest stretch from high to low that I want to look for a potential contra trade is going to be around 12 points. That should help you a lot in terms of placing trades very quickly. Again, same thing here. We had 1860 was approximately below 1880. So I know 20 on big days when we're having directional moves is about where I get exhausted, right, between 15 and 20. And when I'm having balance days or non-range extension, right, I'm looking for 12. That ought to help you adjust your, I'm not communicating this very well, but what I want to say is that should help you with your rotation size. In other words, if you see that we're in a balanced day, right, and you know that 12 is the biggest part of the range, and you've taken a trade at the zone and you've got a rotation and you've got your first scale, what you don't want to try to do is push. If all of a sudden on one of your trailers you end up with 10 points, and you can look at the tick and you see that we're in balance, I'm probably taking most of my money off at 10 points, if even that, right? If not sooner, because I know the odds of getting a 20-point stretch on a balanced day are low. Conversely, if I see us driving really hard in the first hour, right, I'm going to pull my eyes up from where we open. First of all, I'm going to look for the prior days from the low, and I'm going to look 20 up and 10 up. Okay, as potential areas from where we open intraday as to where I'm going to place my trades, and conversely, from the highs, I'm looking 10 back and then 20 back. Okay, and we'll know really quick off the open whether we're having open drive higher, and I'll probably be able to call which of the two ranges I'm looking for. It should help you adjust your targets and your entry points. Okay, so let's go back over here real quick. Oh, and one other thing I pointed out, we are starting to make a series. If we hold this right here, this could end up being a series of higher lows and higher highs. If we hold this pattern here and we continue to run this morning, like I said, we're trading right at the very top of this range. If you'll look right here. Okay, so I'd expect to get rejection right out of this area, this 1883. 1884 is my guess that we're going to have rejection out of there, and then up there at that 1886.50, it's somewhat weak, right? And then I would push for that 1890 to 1892 area in terms of trade location. Let me show you how that translated onto the chart. Okay, so again, this is the most recent swing area, and I do think that we'll find responsive sellers first time in. Now, what does that mean? What makes that difficult this morning? Well, if they don't push Globex high here in the next couple of minutes and we don't push into this 1883, which I'm really hoping we do, because it'll make it a lot easier, right? I'm going to assume that we're going to be able to push the next 2 points coming into the open. Okay. Now, you'll notice there's no zone between here and Friday's close, right? The gap fill. Hold on a second here. And what that's going to set us up for, assuming okay, this will end up making this area right here. You might want to highlight it on your chart. This assumes that we push all the way back to 1885 3/4, right? That makes that 1879.50 to 1878 half gap. Okay, now that assumes that. Of course, if we only open to 1884, if we only run to 1884, you're going to need to adjust this back, right? Now, most people are going to try on this retrace if we get that, and they assume that we're going to break higher, and everyone and their brother's been waiting for it. Okay. First of all, half gap is an aggressive trade. What I usually try to do is push to the 62% retrace on that half bat. Okay, and understanding again, it's an aggressive trade. Let's go back and look at what is sitting in this area to see what would be most logical for potential reversal. Okay, so if we look, we had a little bit of structure right here, right in this area. Okay, the bottom end of this structure, actually the very top of the structure, is sitting right here, about middle of that zone. Again, that would put it about 1878.50 roughly, and the very bottom of that structure is right here. Okay, so what you'll notice, and here's the risk. If we get below this point, which let's see what this point is. If we get below 1877.25, okay, we are very poorly auctioned right into the gap fill. So it'll be quick. It'll probably be a quick 3 points to, let's see, 1875. It'll probably be a pretty damn quick 3-point rip-off if it doesn't hold that gap fill. You just need to be aware. Wow, I'm running a little bit slow this morning. I'm trying to figure out how to word this correctly. Okay. If you feel the market is strong and you're getting a half gap read, and you're going to take the risk of that, this would be the area you'd want to take it in. You wouldn't want to see it trade much behind this 1877.25 because it's very likely to come in and get the backside of this gap fill at 1873.25. That's essentially a 4-point rip between where half gap is and gap fill is. Again, that assumes we're going to test the back of this 1885.75. So I hope that gives a little bit of clarity as to how to handle gap fill. Who handles gap fill, or who trades gap fill? Aggressive traders, right, who understand that if they get stopped, they may have to reload at the open gap, right, which has a lot of confluence in it. You have Friday's high, and you have Globex low, along with gap fill right there. I would anticipate that there would be responsive buyers the first time in, okay? So I won't call the half gap trade. I'll watch the price action, and if the price action indicates that I can get a good entry there, I will probably take half gap in an attempt to get a rotation higher. It has to work quickly, meaning when I say something has to work quickly, it has to look like this. Right here, see how we just came into a small little area, dojied for 5 minutes, and then took off the other way? That's exactly what I would need to happen at that half gap. If it didn't happen, I'm probably bailing very quick. It's for aggressive, advanced traders. It's not an easy trade to take, and you should not take it if you cannot reload at the zone below, because there's a tremendous amount of confluence in here, and we're almost certain to see responsive buyers the first time in. Okay, so let's go back to our trade plan real quick. And that's why there's no zone in between, because we can simply let the half gap or the 62% retrace essentially create a zone for us from wherever the swing high is. Okay. Moving forward. Let's zoom this out just a bit. Let's get rid of this. We no longer need it. And so these lines right here, right, this is sitting at the bottom of the structure right here, which end up being 1878.75 all the way down to 1877.25. If the half gap's going to hold, it needs to hold this particular area. Okay, and it is not a zone, it's a half gap trade. Okay, and that's why I've left it wide open. So, again, let's focus on the upside where I'm taking shorts. I'm probably taking this short first time into this 1885 area, approximately, unless we open exactly at that point, in which case I won't, right? Instead, I'll look to reset at the half gap or the gap fill for a long side trade. Once we get up in this 1889 to 1892.25, I will look for a tick divergence. Again, this assumes we hit this after the first half hour. Tick divergence is not that reliable prior to 9 a.m., FYI. Okay? I will look to take a trade somewhere in here. If I can't get tick divergence or price action to help me, I'm simply going to aim for the back of the zone with a 2-point stop behind. Okay? If we look above, there's an extension here. So this 1895, 1897 puts us up 20. But realize, once we're above this 1892.25, we've never traded above. They're new highs. Okay, so there is no structure, there is no resistance to rely on an exhaustion move back to the downside. So people ask how I handle this. What I'm looking for in these areas is signs of exhaustion. Again, even 1 minute tick divergence becomes questionable because normally what I'm looking for in 1 minute tick divergence is when we have structure, okay, and we get a, let's see how I'm going to word this. When we have structure and we get 1 minute tick divergence, the structure usually creates a zone. and we get the 1 minute tick divergence, we have something to lean against going backwards. If we just come up here for the first time and we get 1 minute tick divergence, we can just continue to have 1 minute tick divergence all the way up. What's easier to trade or easier to handle that is one of two ways. Okay, so if you let it come up here, then you let it come down, and then it pushes and creates a slightly new high, and then you get the 1 minute tick divergence. Okay, with a reasonable stop, and I'd usually give it 2.5 to 3 points. Okay, if this push to a new high is on tick divergence from structure that was created earlier in the day, that gives a reasonably good entry. Okay, again, I think this should occur somewhere between 1895 and 1897 initially. The only area I will take a trade without question first time into the zone will be this 1900 area with a 2-point stop behind. I could simply get run over on a non-stop uptrend, right? It's certainly very possible, but we'll have a nice big stretch at that point. This will put us up almost, let's see, 25 points on the day. And that's been, even on our best days, that's been a really wide range. We haven't been able to push beyond that. So I'm certainly taking a trade at this 1899.50. I'm probably taking a 4-point stop if I'm wrong on it, but I'm willing to lose money at this particular point. The other way that I have of handling this particular trade is that if we break out above, right, and then we close back below into this area, that will trigger a trap trade. Realize if that occurs, that whatever the swing high is above this point, okay, that will be technically the correct stop. Okay, so measure your risk. If that swing high is all the way back here, right, and then we trap below here on a 5-minute bar, meaning the 5-minute bar closes below this 1892.25 where we broke last time, that you need to size it so that you can handle a ride all the way back to do a test and possibly even a 1 or 2 tick break above, and then your stop is on the backside. Trap trades are fantastic trades. They make a lot of money, but the stops can be intimidating to smaller traders. If you can only trade one contract, it makes it virtually impossible. If this requires a 7-point stop, right, there's almost no way to adjust your entry or take your entry when the trap occurs and still be able to ride out the storm to the upside. I think it's a bad idea when traders go, I'm going to take the trade here anyways, and as long as it stays within, let's say, my 2-point stop, I'll be fine. This turns what is normally a high odds trade, right, into a low odds trade, because the odds it'll come back up and tick your 2 points and then take you lower are very high. Okay, the odds of it coming back and taking out the swing high after it's closed back below the breakout point are actually relatively low. Okay, and it can be extremely frustrating to take a trade, get tagged out, and then watch it tank for 10 points back to the other side of the range. I want to remind you that bigger picture, let me pull up the volume profile here real quick. Okay, you'll notice this whole thing, right, is one of balance. The market's not going anywhere. The highest close through this series has occurred right here, okay, 1876 essentially has been the highest close. Hasn't been the highest open, but it's been the highest close. The highest open was right here, and that was 1878.42. So this open tells me a couple of things right here. First of all, we're opening 1881, it looks like, maybe higher. Okay, very top of this range that has been untested. There's not a lot to block us from going to new highs here. Secondly, it is not uncommon. I'm going to go back and show you all this really quick. On gap and goes, we get to a top of range that is broken. Okay, here's a good example. This last time here, when we came to the top of the range, okay, you're seeing that down here. We gapped. This was the gap. We did a minuscule amount of backfilling. As a matter of fact, we'll look closely to see what the difference was between the open and the gap fill and then where it pushed. So I think that will give us a pretty good model for potentially what we might have today if we get an upside push. Okay, so in this particular case, the open was 1871, and a quarter. The low was 1869 and a quarter. So there's only a 2-point rotation down off the open before we got a big push up. What was that push up? From 1871 and a quarter up to 1878. So it wasn't humongous, right? This entire day's range was less than 10 points. Okay. However, it did effectively set us up for a breakout and then a push the following day. We've already captured 7 points. So I'm going to assume that if this holds and I see that 2-point rotation, right, I'm going to look size-wise. Let's see what the gap was on this day because it was recent, and it'll help us gauge where I think it might go. So the prior day's close was, in this particular case, was 1864. We got to 1871. Let's just call that 7 points for the sake of conversation. Lo and behold, we're gapping 7.5 points today, right? So with this 7 point, you got to understand, we only moved up intraday from where we gapped to approximately 8 points, right? 1871 to 1879-ish, let's call it. However, on the day, it was 1864 to 1880. It was essentially a 15-point range, right? If we had that exact same model, or the market follows that model, today where that would end up putting us, let's flip back over, hold on one second here. That'll put us from 1873 to 1881, puts us up 7, 8 points. So if we go for 15, that'll put us, that right now puts us right here, 8 points. If we go for 15, that'll put, let's see, another 8 would be 81, 90. That'll put us right here approximately. Again, that's another reason why I'm looking for responsive sellers in this area. The market doesn't match exactly what it does each time. There's nothing that says it just can't blow straight through and go from here. But looking back, particularly when the last time that we attempted to attack this area, the market to the upside was actually much stronger, and we're still only able to garner a 15-point upside move in this area. So again, that area, hold on one second here. This area again becomes very, very attractive. If we gap here and we have no rotation whatsoever at this 1885, keep in mind the rotation down from the point where we gapped was only 2 points the prior time. So keep it in mind, we don't even have to come in for half gap or gap fill. We can just simply keep going and drive straight to this point. Also, if we get to this point, the rejection may only be 2 points, and then we get a sideways consolidation. And then the failures on the range extensions have been coming after 11 o'clock here lately, right? So let's expand this out a little bit more so everyone understands, because I want to be very precise in how I'm going to take these trades, okay? If I see a gap, open drive higher, and only have a 2-point rotation, the first thing I'm going to be thinking is potential open drive higher, I don't want to get run over. So the first thing that comes to my mind is I'm going to go and mark off on my chart 9:30 a.m. Why? What happens at 9:30 a.m.? That's usually, not always, but usually about the earliest we start a roll back to the downside. Could it come up into the old highs, reject, and shoot straight down before 9:30? Sure. But what I'm trying to do is, remember, I'm trying to trade as many contracts as my account will permit within reason, right? But more heavily leveraged than the average trader, okay? And then I'm trying to look for points and periods where I can get in with very little risk. Okay, and I moved the scale so that it's very hard for them to take my money and very easy for me to take other traders' money. That occurs when I get 1-minute tick divergence, when I get the market really stretched into critical areas, right? And then the last piece is the price action itself, and I want to point something out here. There's a difference between slow, methodical price action and fast-paced price action in terms of trades, okay? If you look, when we were in this, if you go back to a 1-minute chart, I'm not going to do it right now, but in here, people were asking me whether this low was going to hold or not. And the trading in here was slow and methodical. It was not fast, okay? The problem that I have is, A, I'm a visual guy, but B, in order for us to get price dislocation, meaning that we catch traders in sufficient quantity being on the wrong side of a trade, either whether they're chasing or they're panic covering their shorts, we need velocity, okay? Velocity generates quick, fast turnarounds, which is what I look for in my trades. If you look here, we were just kind of prodding through here. It was going in jerks and fits up and down, but it was not a smooth rotation. If you compare that to this move up into the highs on Friday, this was basically it was poorly auctioned, meaning that we had a good chance that if we took a responsive sell, it would be easy to slip through this area, right? Secondly, and importantly, if we're just kind of sitting here and going really slow in this area, the only thing I have to lean on is actual structure itself, which is fine. That's sufficient for most traders, okay? But for me, it's not, because I want to catch that last couple of ticks where people panicked, and I get in and I can take as little heat as possible. Also, if I look above here, right, when I was taking the long, this created a lot of congestion, and I needed to get above this congestion in order to move through. Now, there's one more piece in here I want everyone to remember. If we look from Friday, this was well auctioned in this area, and again, this is setting up to become a half gap here, okay? But below here, it's poorly auctioned, really all the way down to right into the middle to back of the white zone, okay? It could reject right out of the top of the white zone. It's a possibility. But if I were looking for my best trade location, I'd probably look right to the middle to back third of the zone, because that is where it stops being poorly auctioned, and we actually get a pretty good shot and get a reversal back to the upside. Again, they could step in right here, and I would simply miss the trade, but according to auction market theory, the better trade location is back here, and I'm willing to wait for it, okay? Assuming that half gap doesn't hold, again, on half gap, the area I'm looking for is this back little area here, which is specifically, if it lines up, is approximately 1871 to 1869.50 is specifically where I'm going to be looking to see if I can't get a responsive buy to the upside. Again, at half gap, it has to be quick. Okay, so if you see the open drive higher, you see us moving to new highs, and it's prior to 9:30. Okay, and you're not sure that you're willing to take the stop there, or you have a smaller account, and you have to have a higher degree of certainty that you're not going to get run over, wait till 9:30. The reason for that is, and again, this is all, what I'm trying to accomplish is, instead of calling out trades, specific trades, and saying I'm just taking the trade here, or I'm taking the trade there, the whole point of the market preview is to reiterate and reinforce the items that I go through with my coaching clients, right? Because what all of them have learned, I think they would say to a T, is if they could just eliminate the trades they take that were mediocre trades, their good trades take care of themselves, and the P&L grows a lot faster. Once you can get past that frustration of missing a trade that you saw but wasn't the highest odds trade, life becomes a lot better, your P&L gets a lot bigger, and you don't feel frustrated any longer, because normally that frustration is a result of wanting to make as much money as possible. But if you're only taking your highest odds trades, and you're building on an aggressive basis the amount of contracts you're trading based on the number of profitable trades in a row you've been able to garner, okay, in terms of percentage-wise, right? Let's say 8 out of 10, 7 out of 10 type numbers, right? You no longer need the 5 or 6 trades a day to make money. 1 or 2 trades with good volume gets the deal done for you. So I think I covered it on the upside. The one area I do not want to get aggressive with, right, is if we get above this 1892 and a quarter. I put this 1895 to 1897. It's certainly possible that we get here and we reject, but I am marking this as a weak zone. Okay, I have to have tick divergence here. Okay, and it has to work fast. In this particular case, I'm giving it about 12 minutes, even smaller than I normally do. And the reason why, there's nothing here, guys. It's new highs. There's nothing to keep them, just to keep it rolling higher, right? Same thing in this area, specifically 1899.50 to 1900 even. Okay, the reason there's a zone here, this is a psychological number. People look at big round numbers and they tend to reject. I'll probably take it the 2 ticks in front of the round number. They may step in a full point before they get there, and we never get up here. Okay, but I will try to stick a trade here based purely on my past trading experience that round numbers tend to generate rejections at that point and will be very stretched. But I want to emphasize and be very clear, that's all we have to work for us here. There's nothing else here, and it could run and just simply get a stop. How do you handle this if that's the case? If we break out and we're about to make an upside move, it's 820. How do you handle this area? It's very simple. If you can't handle the risk of taking a stop at a new all-time high, wait till the market auctions this area and then creates an area of support or resistance in it, or don't take shorts above this 1892.25 area. Let the market work itself out. Tomorrow will be a new day. You don't have to step in front. Okay. I doubt that if we set a new high today that we're going to reject and come all the way back down. The first clue that will happen will be that we'll get above this, we'll get back below here, and we'll create a trap. That'll be the first sign that we're having to move to the downside. But remember, if you look on the volume profile here, okay, let's get rid of all this. When we bring this down into perspective, we've been building a lot of energy in here. People have been duking it out between the longs and the shorts. Bears trying to push lower, and bulls trying to push higher. Okay? Just like when we get structure that looks like this. Give me just a second here. Because I know everyone has seen this on a day basis, right? Let's move it to 15 minutes so we can see it easily. Okay. Okay. Just like in any other structure, when you build, okay, you have a small area where energy gets built up. When we break out of that area, we tend to have a strong push in one direction. Okay? I can give you multiple examples of that. You see down here, again, this is a 15-minute chart, right? We based here, okay, built up a lot of energy, made a big push to the upside. We consolidated here, right? We broke out of here, big push to the downside. Same thing here. You can see the structure where we built a lot of energy in this one little area. And when it broke, it made a strong move to the upside. So we know a couple of things that are on our side. We know that on range extension days, right, 20 points has been about the maximum stretch. Okay, so those are the areas we want to look for potential reversals if we have open drive higher. Okay, we also know that if it's not a range extension day and it goes in the balance, that 12 points has been approximately on range. That should help you locate that good trade location. On balance days, tick divergence is a much better indicator than it is on range extension days. Okay, particularly prior to 9:30 if we're having a range extension. Wait till after 9:30 to rely on the 1-minute tick divergence to get your trade location. Okay, so essentially what we have on the daily is a big area like this that's been building energy. And once that energy is released, it can produce a strong initial move in one direction or the other. Okay, let's get rid of this. And then I want to take a quick look at NQ, and we'll go from there. Okay. Let's just draw a blank chart for this. Okay. So a couple of things. First of all, overnight, if we get to the downside, the first thing I notice here is this is all poorly auctioned. It's right here, this 35.54. Not saying that we'll get there, but it is poorly auctioned. Remember, what slips through easily one way can slip through easily the other way. Half gap right now, if we're going to look from where we closed to where we are right now, it's approximately here. Okay, so the closest we get to the top, to the decent structure, right? This assumes this is the high, which I doubt it will be in a couple of minutes, right? The closest we get to half back is going to put us right in the middle of overnight, poorly auctioned area. How about on the RTH? Do we have anything in there that might help us out? Let's go look. Okay, on the RTH, again, there's a 15-minute chart. If you look right in here, we have some structure right there at that 35.59.50 to 35.60 let's call it 3561. Okay, so, but above that, very poorly auctioned, all the way up to this area, right in here, 3576 to 3580, roughly. And I imagine if we push this morning, that'll be the first place where we get responsive sellers. If we get up there, again, that occurred during the RTH. It holds much more weight for NQ than the overnight does. Okay, so this 3560, I'd mark that off on my NQ chart. 3561 to down to 35, let's call it 59. That 3-point range is where I'd be looking for a potential half gap. And you'll also notice that's exactly where we took a stutter step in the overnight session as well. So we'll see what it holds. If I'm an aggressive trader again on NQ, that's where I'm looking for my first long. If I'm not an aggressive trader, I'm looking for gap fill in order to get responsive buys for the first time. I doubt we see a stop and a rollover to the downside right out of the gate. And then the last thing that I'd be doing on your NQ charts, guys, given we have a 23-point gap, okay, 30 points has been about the maximum rotation we've had recently in NQ. It could be changing today, but I doubt it. I would go into my NQ charts and I would draw this trend line right here, 2 of them. This one right here, number 1, and then this one right here, number 2. Okay? If we don't get below, there's 3 minutes to open. If we don't get below this trend line, there is no downside. Okay? We may have a down move, but from a day point of view, the market would be strong as long as it held that first uptrend line. An even bigger picture, right? I imagine this 3520, there's going to be responsive buyers. Also, this 3550 I've marked off on numerous occasions. 3550 has been a key critical point in NQ. As long as we hold above that 3550, okay, which will bring us again right to the top of that zone and gap fill, I would say buyers are in control above 3550 and bears need it below in order to make anything happen, and we're already pushing 3582. So I need to get these charts out to everybody. Last correction here on the chart, and then I'm going to send this out to everyone to get ready to trade. So obviously, I've gotten my wish. Okay, so I know what I'm looking at. Wrong date. There we go. Close workspace. Okay. 1872. That certainly helps. Excuse me. 1882 and a quarter. And that gets us damn close. Let me see what I'm going to do with this zone. 1882, most recent swing high. Okay, I'm going to leave. Okay, I'm going to make the zone like this, which will put us to this actual swing high, this 1884, 83. Okay, but just realize all the way back to 1885 and 3/4, this entire area, again, it's tricky. This entire area was swing high location from 2 days. Okay, so what I want to see in order for the market to test any downside is I want to see us get back below this Globex low. This area becomes questionable, and instead I would shoot for this, either the back, this 1885 and 3/4 out of the gate for potential rejection, right? And then I want to see it get back below Globex low. If it gets below Globex low and comes in for half gap, okay, I want to see it quickly get back above Globex high in order to make a push up in this direction, and I'll call them as I see them. I'm going to post this chart in just a second and send the file out. So again, how I'm handling this, 1882 and a quarter is going to be a solo zone, single point. And then this 1885 and 3/4 to 1884 will be the actual zone behind it. So let's make it 1884 even. Okay, and I'll send this out in just a second, guys. If anyone has any questions, you're welcome to reach me on email. And we just opened, so let me get this right out to you, and we'll talk soon.